Okay guys, this is the second video. Also watch the first part, the last video I made minutes ago. That's also very important. Now we come here to crypto. You see that nearly the crypto at this moment at around 2 o'clock a.m. EST time. This is now everything is bullish, but this is just a short-term correction. The recovery of yesterday's fast and very quick bearish move of yesterday, so the market is going back again in a year of highs, possibly going back to around, I wrote it out in the chat, we will possibly go back to around 87,740, 88,425, and then at around 89,455 it will be very, very, very serious. Why? Because today we have a lot of important news and we have a troublemaker. We have two troublemakers. The first one is Nvidia. The second one is Trump. I like him personally, but the tariff policy that will continue until 2029, every day you will have this very choppy, volatile market. So the data today, we estimate the US GDP quarter 4, the second estimate, that measures the total value of goods and services produced within the United States over a specific period. And it is the broadest indicator of economic activity and growth reported on a quarterly basis by the Bureau of Economic Analysis. And this data, you need to remember, we are in February, right? That means the data is what you will receive. I expect it very bad. Why? Because the last quarter of Biden administration was terrible. So this is the past data. Now a lot of people can say, yeah, but Trump is making problem, right? As President Trump came, he is here to fix all these problems that have been made during the last government period, right, of President Biden and Mrs. Kamala Harris. So that means all the data what we are receiving, these are the data of the past, but the market is reacting to them, right? Instead of looking, okay, the tariff policy and the whole government US policy at this moment. Of course, he said it also himself, and I said it too, that we will have inflation, we will have higher prices, and at the beginning, you know it also, you are coming into a room, the room is dirty, the room is, everything is broken, destroyed, and somebody is telling you, okay, this is your room, clean it up, fix everything, right? What will you do? Of course, you need to start to fix everything, right? And at the beginning, it's painful, it's suffering. But as you continue, you improve and the situation improves too, right? This US data or the GDP is often analyzed in three forms, okay? We have a so-called headline GDP that shows overall growth. Then we have a real GDP, which is adjusted for inflation especially, and GDP components which break down contributions from consumer spending, business investments, for example, government spending and trade, and especially government spending, they made a lot of troubles, right? Therefore, the US debt. What can we expect now? Well, the US indices, for example, NASDAQ, S&P, Russell, Dow Jones, and so on. A strong GDP growth can, of course, boost equity market as it signals a healthy economy and strong corporate earnings. However, if growth is too high, again, if it is too high, markets may worry about Fed tightening, which could weigh on stocks. And we have seen in the last videos I have displayed also highlighted the NASDAQ S&P Russell chart. Go watch it. Why I expect it doesn't matter how the data are, the NASDAQ will make a pullback and then it crashes down. I don't mention it deeper in this video. I mentioned it already in the last video. Go and watch it. Therefore, the technical about NASDAQ Bitcoin, go and watch it. I explained it completely. However, if now the growth is too high, markets may worry about Fed tightening, which could weigh on the stocks. What will happen to the US dollar? A stronger than expected GDP print typically supports the US dollar, right? Dixie. This is the dollar index. And it suggests that economic resilience may influence Fed policy. And I tell you something, at this moment, dollar is down, but dollar soon starts to skyrocket again, right? This is very important. Dollar up, stocks, Bitcoin, gold, nearly everything is down, right? So you need to be very, very careful now with your decisions. Also, we will have a lot of traps of Nvidia. I will show you also in this video, especially the Nvidia, why it's going to trap. And therefore, we have, of course, and this is something very normal, that now also the Fed policy will influence every second. The Fed talks we have today, let me check it again quickly. We have today also Fed talks, many Fed talks, like yesterday. Yeah, at 2 o'clock European time, it's about 8 o'clock. Then FOMC member Barkin is speaking. Then in the afternoon, the US time, we have 3 Fed talks directly after the data. FOMC member Bowman, Hammock, and FOMC member Harker are speaking. 2 of them are for hiking in the interest rates. Tomorrow we have Goolsbee speaking. And what is very important to know, if you read, for example, that they say at that time FOMC members are talking, do not trust it only because all this news platform does not or do not tell you when the others especially are speaking, right? We had many times, suddenly the market reaction, what happened, and 2 hours later they published, some FOMC members said this, and nobody knew that they will talk, right? And this is the perfect plan. You need to be very, very careful, guys, right? And you need to fade them out, right? Everything what you see or read in the news, I said it in the last video, I showed it to you why, and in this video I will also talk about it, how you will find out and why. Never believe what the news are telling you. This is very, very, really important, and you need also maybe to make your own guidance or rules, right? Then we have the U.S. government bond yields. So the higher the GDP growth can push these bond yields, 10 years, 2 years, 5 years yields, for example, up, because as it raises, the expectations for inflation and tighter monetary policy of the Fed raises too, right? If we have a weak growth, that can lead to lower yields, That means the junk bonds, the bonds will go down as investors anticipate rate cuts or seek safe haven assets. But the bonds will go down if the GDP is weak. On the other side, the stocks will also go down because it's weak. That means it doesn't matter how this number is coming out. If it is too strong, it is bad for the stocks, for crypto. If it is good, it is bad, and it is neutral to bad for crypto. If it is weak, it is bad for stocks and crypto. So whatever happens, right, you need to understand a little bit the data, but if you understand how the data work, then you will have a good edge. Then we have the next data, also very important, the US durable goods January prelim. These are orders, for example, that measure the total value of new orders, which placed with manufacturers for long-lasting goods, those expected to last, for example, 3 years or more, okay? So for example, such as automobiles, appliances, aircraft, and so on, all right? So the report is released monthly by the U.S. Census Bureau. This is providing into business investment trends and consumer demand. That means it's interesting for midterm to long term. And this is a core measure which excludes volatile transportation orders, for example, okay? And this is often used for clear view of underlying demand. Now, if the data are going to be released, what can we expect? Well, first of all, again, for the US indices, strong durable goods orders can lift equities, particularly in the industrial and manufacturing sectors, signaling robust business spending. Weak orders may be raised again, concerns about slowing economic activity. What does that mean? That will influence again the Fed policy. For the US dollar, a positive surprise in durable good orders can support the US dollar by suggesting economic strength, while a decline may weigh on the currency. That means if the data are good, it's good on one side for the stocks, but it's also good for the US dollar. If the US dollar starts to rise, this is again bad for the stocks because US dollar is always has a negative correlation to the stocks, okay? Then we have also today the US government bond yields. This is very, very, very important. Higher durable goods orders can push yields up as they indicate stronger economic momentum and potential inflationary pressures. And weak data may lower them, but on the other side, if we have weak data for the yields, but the GDP number is strong, that can again push up the bonds. That means that we have the stocks, crypto is going to be attacked from every side today, okay? This is not the only thing. Now, the next very important data is expecting the US initial jobless claim or the unemployment report, okay? If this number is lower than expected, that means we have a signal for a stronger labor market, boosting equities, while higher claims may spark concerns about slowing job growth and pressure stocks. For the US dollar, a stronger labor market reflects in lower jobless claims. This can support the US dollar, but this will influence the crypto and the stock market negatively by reinforcing confidence in the economy, whereas rising claims can weaken the economy, okay? And we have the government bond yields report. And that means a decline in claims may push then the yields again higher, right? And if we have also good GDP number, then the bonds will skyrocket, right, to the moon. And while then an increase can lower yields due to expectations for a soft economy and potential Fed easing. All right, now we go here to Bitcoin. And what we can see is clearly very, very important that at this moment we see here the price is the correction or the bull run. Look, this is this very, very small green candle after many big red candles, right? This is just a recovery. Maybe some day traders are taking here 100 or 200 pips, sell, buy, whatever. It is not significant, right? So the very important point is that the market, if it comes high, become to 86,540, but latestly to around 89 to 90 before we go down. We see here also the low of yesterday was 82,700. So on the other side, if we look here, the next target will be at around 81,365 and then 80,591 before the market reaches this level at around 72,000 to 76,000. And if we break that level, then the first target is at around 6580 to 66. And after breaking that, and I think at that moment we won't have any problems to go to 65,000. Yeah, exactly. Yeah, I think. Yeah, to 65,720, and the next gap is at around 65,000. This is this back, this doji, 65,075, and then we will go down to the next level, and this is 60,200 until 62,000. Okay, this is the technical. Now fundamentally also very important. Why? Because the large traders, large speculators are bullish on Bitcoin, but the commercials are bearish on Bitcoin. What does that mean? Watch again my last videos. That means the big guys are selling Bitcoins and they have been hedging themselves. That means even if the market makes a pullback, we will go down and surely reach these levels 100%. Also, I show you now the next one is Nvidia. So Nvidia is below the 50-day moving average, below 133.89, touched around 127, and it will go down definitely, and I tell you now why. Not only technically, and some say, yeah, it will come up, but if touched the EMA 200, buy it again. Guys, do not follow these advices, right? This is wrong. Trading with EMAs had the most failed entries and also profit takings. With other words, very bad and very losing money. But I show you something again. We see here the COT report. We see here, look at this. COT report, Nvidia. Look at this, the red line, right? The red line are the large traders. Who are the large traders? Hedge funds, traders who are not trading good, hedge funds like Lehman Brothers, hedge funds like many companies, they are not existing anymore, right? So the long-term capital management like FTX, all the billions they have been stored and gotten from people are wiped out, right? I don't know. Some say maybe money laundering, and they say they are not solvent anymore. Who knows? Who knows? But we see here these large traders in 90% of time, they are always wrong. Rule number 1, follow the commercials. Rule number 2, do exactly the opposite of large traders. Rule number 1, we see here blue line, commercials are selling massively. The US stocks, indices, the US companies, they are selling and are bearish on crypto. And here Nvidia, they are selling Nvidia, the big commercials. These are the very powerful guys. I mentioned it in my last video today, right? This is the part 2. Watch the part 1. I explained it there completely. And what are they doing here? Nvidia, the commercials, the blue lines, you see, they are selling is below 0, below 50 or 0 line, the midline, center line, meaning they are bearish. Rule number 1, follow the commercials, meaning we wait for the market setup. If the Nvidia goes up, do nothing. Don't go long. Wait for reversal. Use stochastic, RSI, MACD, for example. Wait until the market cannot run higher. Wait for divergence and then sell Nvidia and go short massively. Why? Rule number 2, do exactly the opposite what the large traders do. That means the large traders are bullish. They are above 0, right? We wait because we want to follow the commercials. They are bearish, and we do the opposite of what the large traders do. We sell. They are bullish. We are bearish. If they were bearish, we would buy Nvidia, right? Because in 90% of time, they are always wrong, right? So now some say, but these are Wall Street guys. Guys, people of Goldman Sachs, of JP Morgan, of Wall Street, they are no traders. They are businessmen. They are no traders. They have no idea of how to trade good. The good old traders, the legends, they are out of the Wall Street. But these people of Wall Street, they are no traders. They make business. They are business dealers. They invite you because you have billions. Say, hey, have a good day. Everything will go up. Invest with JP Morgan, with Morgan Stanley. Next year, you will have, with a big sunny smile, of course, right? They tell you all the best of your dreams, or maybe you have not dreams you never had, and because they want your money, right? They are business makers, business dealers, but they are not traders, all right? So therefore, these people are always wrong. BlackRock, right? Now some say, but BlackRock, no, BlackRock traders are terrible. There are also business dealers, there are also business makers, right? And they have not so much information like the commercials. BlackRock is strong financially, but is not the most powerful. There are commercials who have BlackRock, even BlackRock, in their hands. Why? Because these commercials have the real network, much more billions, and they own the markets. They own the markets. Therefore, the commercials are always right, okay? So, we see Nvidia, Bitcoin, NASDAQ, S&P, the commercials are selling those markets. Rule number one, we do exactly the same. Rule number two, we do the opposite of large traders. That means you read, for example, a lot of news. Suddenly, maybe you have noticed each time the market falls, that means a lot of people are making losses and they are liquidating. And in the chats, they write, the market sucks, so I will take a rest. I don't want to trade anymore. Suddenly, you get the opposite news. Yeah, Bitcoin, for example, Bitcoin came down from 100 now to 88. Suddenly, then Bitcoin, yeah, Goldman Sachs says, Goldman Sachs, I'm not quoting Goldman Sachs, okay? It is just an example. Goldman Sachs or JP Morgan say Bitcoin goes to 150 until the end of this year, right? Or JP Morgan said oil will go to 150 until summertime or whatever. But the market is falling, guys. The market is falling because of a very, very important reason. It is not only the price chart, what we see, behind every tick are billions of dollars. It is a war, a very big war, right? And then suddenly Donald Trump comes, says tariffs unlikely to spark persistent inflation, or I'm not going to stop tariffs. 2 hours later, what does he say? He says, okay, delay. Tariff delay for Mexico and Canada, right? With other words, he sows, for example, confusion, right, on tariffs for Canada and Mexico, floats 25% duty on EU goods, and then 2 hours later he say, yeah, EU is our ally, right? And exactly, right, like he did it yesterday. Yesterday, on Wednesday, he raised hopes for another month long pause on steep new tariffs on imports from Mexico and Canada, saying they could take effect on April the 2nd, but floated on the same time 25% reciprocal tariffs on Europe cars and other goods. And then on Thursday night, on Friday, right, after the market closed, 1 hour later he says, now we put much more tariffs on Canada and Mexico. But guess what is happening? Everybody buying, but now at the weekend you have no possibility. You cannot execute your orders, you cannot take out your positions, and on Monday the market opens gaps down. How many gaps down have you seen since the beginning of this year, right? And the big guys make money with that. Wall Street doing the same. All the important news coming always at the weekend when the markets have closed. This is the trick of the Wall Street guys. I said it in my last video. I said it in many of my videos, especially Iran-Israel conflict, Iran-Israel war. I have mentioned it 100%. Go watch it. I have given you a lot of evidence about it. And this is the game, guys, okay? If you want to survive markets, then you must start to play this game very, very much more smarter, right? One code is that Trump is sowing this confusion because he's fighting. It is a private war, right? It is not about a fight or war between United States, American people and European people, or Iranian or Arabic people or African or Asian. Because we are people, right? So you don't know me, I don't know you, but we're respecting each other, right? We have no conflicts with each other. I'm very sure. If we meet each other, maybe we drink a beer, we talk, so how are you, how's the family, and whatever. But these politicians, they want us to conflict, to fight each other. Therefore, we must be much more smarter than them. And we are very smart. We have been always smarter than every politician on this world, right? So whatever they say, okay, the leftists are bad people. The leftists say right people are bad people. Guys, there is no left. There is no right, okay? There are only good and bad people, okay? And everybody has its own opinion. And if we are respecting democratic values, we need to listen to each other, because we need to listen to each other. That way we can discuss our conflicts with each other, but on a peaceful way. And this is what matters, right? We respect each other's opinion, we discuss it together, but at the end, we put our heads together. Okay, this is your opinion, this is my opinion. Now let's together fix the problem. Let together improve the world, what is surrounding us, right? But the politicians, they don't want it. I'm very sure. Therefore, they gain of your attention, of all these confusions, all right? So be careful about it. Therefore, this is the code if you want a success code to trade successfully the next 4 years. This is the code. Code number 1, Trump tariffs. On Thursday, Wednesday, Thursday, Friday, he makes confusion. Shortly before the weekend, he says everything is okay. Now this country is my friend. After the market close on Friday, during the weekend, suddenly he says, these people are our enemies, we need to destroy them, more tariffs and whatever. Then, on Monday, Tuesday, everybody is losing. On Wednesday, he says, yeah, everything okay, I delayed the tariffs. This is the code number 1. Code number 2 is, don't get trapped by the news, especially this news. I don't like the press. I don't like the news. I respected them in the past, because in the past, and when I say in the past, 20 years ago, 30 years ago, they made good job. But the news of today are more political propaganda and scams and Ponzi's, especially the economic news. For example, Goldman Sachs, Morgan Stanley, right? The Wall Street guys, right? And Michael Saylor and whatever, because they want you to lose your money, guys. Don't forget, they have their billions. If they lose here and there's some millions, they don't care about it. If you lose your money, you have a big problem, right? Therefore, in these videos, therefore subscribe to this channel, share my channel, that is grows, like this channel, is good for the algorithms, comment, you are helping me, yourself, and also other people who are in your situation with this channel, right? I'm showing you here the secrets, right? So you see here, large traders, who are these red line people, the large traders that are buying NASDAQ, Nvidia, all those morons who are telling you, buy Bitcoin, it's going to 150, or buy NASDAQ, it's going to 40,000, or buy Nvidia, this is the AI and Nvidia will go higher to 1 million or whatever, right? These are these people. And these people here, the red line, you see here, the large traders, they are 95% of time always wrong, much more. This is the official number, right? And I'm not saying it as a trader. If you ask any professional trader, he is confirming. And I'm sure you know a lot of professional traders. They confirm exactly what I say here, right? Go, make your research. Listen, I tell you something, I invite you to go to search it. Everything is open here. We play here with open cards, guys, all right? So these large traders are always wrong. Therefore, we do exactly the opposite what they do. If they sell a market, we buy the market. If they buy the market, we sell immediately the market. Or better, we wait for confirmation. We know, okay, Nvidia is now short. At this moment, for example, the bar is rising. What do? We know we want to sell. We just wait until the market creates a confirmation, a bearish confirmation, a bearish or selling pattern, and then we sell the market, right? The same with Bitcoin. Bitcoin is bearish. At the moment, the daily bar, a little bit, not too much, a little bit is going higher, has green color. For some people, green color of the bar, of the candle, means maybe bullish. Not to me, because it's also dependent on your trading system or on you personally. What does it mean to you personally if you say the market is rising? What does it mean? Does it mean that the market has opened above the close of yesterday? Does it mean that the market must make a higher price than the high of yesterday's bar or of today's bar? Does it mean that highs and lows of the next candle must be higher than this candle? Is it maybe for you? But in which period? If you compare only 2 bars or 10 bars or the last 50 bars or the last 200 bars, so that means your look back period is also very important, right? So therefore, every trading system is something different than the other one, right? But what you know exactly is it doesn't matter in which direction at this moment, even if Bitcoin from 80, let's check again, if Bitcoin from 86,825 goes now to 87, we don't buy. Why? Because the large traders here are buying Bitcoin. What does it mean? Rule number 2, if the large traders are bearish, buy the market. If they are bullish, sell the market. What do? They are bullish. We sell the market, but not now. We wait. We wait, for example, until the market comes to 88. Then we don't go in the market. We wait. We just observe the market, right? And also we wait for the news of today afternoon. If the news came out, we don't do anything. We first wait for the reaction of the market. We wait. News out, Fed talking, a little bit ups and downs. We wait. We don't do anything. Our target is only to sell Bitcoin now. Our target is to sell Nvidia now. Our NASDAQ sell. S&P sell. Tech sell. Why? Because rule number 1, blue line, commercials are selling all these assets. Rule number 1, follow the commercials. Rule number 2, do exactly the opposite of what large traders do. Large traders are who? The red line. They are bullish. we are bearish. We must sell. Commercials are bearish. We do exactly like commercials. So we want also to sell. Therefore, we wait. RSI turns bearish. Next confirmation, MACD is bullish. We wait until MACD is also bearish. Then the next one is stochastic. Maybe you can use bullish. We wait until stochastic is also bearish. Then the last confirmation possibly. Now the price must go below the close of yesterday. The market goes below the price of yesterday, and now it's time we sell crypto, we sell Nvidia, we sell then any market, right? NASDAQ, whatever. And it doesn't matter how the news are. I told you at the beginning of this video, because also the news are manipulated. But this one, this indicator, the COT report, the COT indicator is not. Why? Because the traders must report officially their positions. The small traders are those who have positions under a certain limit. They don't need to report. Therefore, they are not important. Small traders, day traders, scalpers, position traders, swing traders, who trade with 100 contracts, 1 contract, 5 contracts, whatever. They are not reportable traders, okay, the green line. The commercials, these are the big guys, the very big guys, with thousands, millions of contracts, always reporting. You can read also their positions of 5 years ago. You can go to CFTC, all the documents are there. The large traders also, they are reportable. Therefore, we can exactly track when they have cut their positions, when they are raising their positions, when they have added much more positions, if they are short, if they are long, if they are net short, meaning the amount of long and short positions, this is the net number. Is it bearish? Is it bullish? We can read all the report there, okay? And it gets tracked every Friday by CFTC. It is published every Friday afternoon. That means this Friday too. So this is very solid indicator, but it's not no timing. It is a fundamental, and the fundamentals matter, okay? If we have the fundamentals, we wait for the technical. Technical is timing, meaning now, again, rule number 1, follow the commercials. Commercials are bearish. That means we must be bearish. We have no other choice. If we go long, the probability that we lose a lot of money is very, very high. Maybe 1 or 2 trades you can make profits, but the third one kills you. Rule number 2, large traders do exactly the opposite of what the large traders do. If they are bearish, you must be bullish. If they are bullish, you must be bearish. And at this moment, they are bullish. We do the opposite. That means our setting or setup is bearish. We wait for the next good sell opportunity, all right? So I hope you have enjoyed these videos. Comment these videos, please. If you have some questions, okay, just put it below. Again, share the videos, like the videos, subscribe to my channel. Have a good day, and I hope you will make very, very good trades.